So the proof of income needed for a mortgage depends on if you're employed or self-employed. The requirements from lenders are very different. So if you're employed, the mortgage lenders will need to see your payslips and corresponding bank statements. But just how many of those they'll need from you depends on the type of employment. If you're permanently employed, they might just need to have a signed employment contract, but most need at least 1 to 3 months of payslips and 3 months of corresponding bank statements showing salary going into your account. If you're a temporary employed person, you'll need to normally have at least 12 months of payslips with bank statements. So for example, if you're on a 0-hour contract or part-time work, you should expect to send at least 12 months of payslips to your broker. And in terms of your overtime, commission, and bonuses, these are all treated differently depending on which lender we go to. So for your overtime and commission, normally lenders will average this over the last 3 months of payslips that you've received and then extrapolate it over a year. For bonuses, it's the same sort of thing if you receive the bonuses monthly, but if you receive them annually, the mortgage lender needs to see normally at least 2 annual payslips to be able to use them for affordability. So for self-employed mortgage applicants, the requirements are very different to employed applicants. You'll need to have at least 1 year of tax calculations and tax year overview documents if you're self-employed. For self-employed people, when you submit your tax return to HMRC, that's when tax calculations and tax year overviews are generated. So it's a little bit annoying for self-employed people. You can't provide a monthly income figure as you could for employed people. You need to have worked for at least a year. And as I say, when you've worked for a year, when you've got your tax calculation and tax year overview documents, that's what your income will be based on. Now, some lenders can accept just 1 year of tax calculations and tax year overviews, but most require the latest 2 years, and then they'll average those 2 figures unless you've had declining income. If your income has reduced from the previous year to the most recent year, they'll base it on the most recent figure. So tax calculations, you may not have seen them before, but they basically summarize the income that you've received for that given year. If you're a sole trader or a partnership owner, you'll see that on your tax calculation it will say profit from self-employment. You're technically seen as the same entity as your business if you run a sole trader or partnership business. But if you own a limited company, you're seen as a director, and in that case, on your tax calculations and tax year overviews, well actually more on your tax calculations, it will show a dividend and director salary income on there. The tax year overviews then, as it sort of states in the name, will show you a quick overview of the tax payable for that year, and hopefully if all the tax has been paid, it should show 0 on the tax field. Now some lenders, if there is still tax payable on your accounts from previous years, some lenders will decline your mortgage application on that basis, so just be aware, try to pay your tax on time, otherwise it could cause issues with your mortgage application. And in terms of bank statement requirements for self-employed people, we normally ask for 6 months of business bank statements, your most recent 6 months of business bank statements, just to see the liquidity and the general health of the company for our own compliance checks. But mortgage lenders may well want to see 3 to 6 months of personal bank statements as well. If you're looking for mortgage advice or to submit a mortgage application anytime soon, contact Boone Brokers. We're totally fee-free, whole of market brokers, and we've got 5-star reviews on Trustpilot. We'd be more than happy to help.